FOMC day to day, very hard market to trade, very frustrating. More capitulation. Today was not as bad as yesterday, but it was still a rough day. Minus 47.20 flat at the end of the day, minus 1100 in the 50K portfolio, down on the week and down on the month, about 4% on the month, 3.4% in the 200K, down about 4% in the 50K portfolio. So tough month. Down slightly on the quarter right now, but this price action is extreme. You wouldn't think that it could. We talked about capitulation and chop yesterday. Today had even more chop. FOMC, there was surprise hawkishness, and so how this happened right here is really surprising. Market should just sell off in this situation, but markets don't always do what they should. Sometimes they been trading against us quite a bit as far as running stops. Very difficult to short even in a bear market, and so you get this massive run up and then it rolls over. So very hard to trade this kind of price action. When we backtest our portfolios with FOMC, it's more positive to trade during FOMC than not. Recently it may not be, but historically, even though FOMC is volatile, it can spawn some nice trends, and there's no way to predict whether any given day will spawn a nice trend or not, but very harsh price action today in the markets. And so this is where we are once again for the results on the day and on the month. And so we are at a worst case drawdown yesterday, another 47.20 added to that. We are still within a tolerance to bounce within the next day or two. The amount of chop in this market is just absolutely extreme, and oftentimes when you get to this point of capitulation, it can be the turning point for a trend. Here is the NASDAQ since CPI. A lot of these moves are really fast, 1 minute moves, very thin order book, lots of slippage. And so this is what we saw on CPI, very fast move. Most of the, half the move was in 5 or 10 minutes, and then the other half was the day session. And then since CPI, we had a really choppy environment, and now that we have FOMC, it's a divergent chop. So it takes out the highs, takes out the lows, takes out the highs again, takes out the highs of this not only today but the last several days, and then it rolls over and takes out those lows. And so downtrends have continue to be choppy. There should be more smooth downtrends and more distribution than we've seen. We've just seen the only time the market seems to go down is on a spike down, and very few just steady downtrend days. And the Fed's balance sheet continues to seem like the reason why. Let's look at the trades on the day. When you look at a group of charts, you can see that the chops tends to stand out even more. 60-minute breakout hit its profit target, got back in again, stopped out. Got long here on this reversal. Once it did this, I thought we might go higher. None of it made sense. Thought the market should go down, but since the news is more hawkish, but since it did this, I thought the market might go higher. Just the liquidity driving it, but then it rolled over. So tick reversal only had one trade today. EVP1 NQ tried to short it here. Thought that was a good short, but the market once again went in, paused its sell-off, went in for a massive stop run, and then we had Cobra 3 exit right before the FOMC, did good on that trade. So that was a positive on the day. VTNQ was long here, stopped out on FOMC. Parabolic, VSD Dynamic got short here, stopped out, got long there, stopped out. So that was the biggest loser on the day. And tick pullback was long here, stopped out on this news. ES did better. We had Cobra 3 hit its profit target here. We had momentum reversal. Like I said, we were up on the day as the market rolled over, but this massive stop run threw all the stops out, got some trades long, and then it rolled over. So just very contentious, a market that's very much against us and what we're doing, and seems to be trading against algos and trends, creating massive mean reversion chop no matter what the event is. It waits and then it spikes and creates extreme chop the chop is greater than the price difference from the close, and so you can see that momentum reversal stopped out there after having a nice short trade on. 60-minute breakout was a highlight. First of all, the long trade from yesterday was stopped out, but then it hit two shorts right here. So those were some nice trades. This was up on the day. Cobra 3 was up on the day. So on the ES was actually up on the day with Cobra 3 and 60-minute breakout short. Up just a little bit, 1155 plus 720 minus this 1144. So 2 for 3 in the S&P. In the NASDAQ, we were, let's see, 1, 2, 3 strategies, 4, 5, 6, 7. 6 out of 7 were down on the day. It's just a wild pattern. If you just look at this 1-minute chart, all these 1-minute charts, at how wild and crazy this looks. So very hard market to trade. Unusual for there to be so many consecutive days of this wild chop with very little trend. So oftentimes that means we are near a turning point, and so you have to manage risk here though, since we are looking for a bounce at a worst case drawdown. And if I'm going through these strategies, and if I look at a lot of these strategies, a lot of the strategies aren't doing terrible. They're all in just a little bit of a drawdown at the same time, because there is so much wild chop right now. It's not as if each of the strategies is performing poorly, but the extreme volatility right now, the inability of the market to trend on the downside because the excess liquidity continues to be the story here. Those are the trades on Wednesday, September 21st, 2022. Manage your risk here, decrease size, or you could potentially, if you've been waiting for this moment to have a worst case drawdown on a small allocation, you could increase here. Look for that bounce. Look to trade E-minis on this bounce and see what happens here. It's hard to imagine that there'll be a favorable market trading condition unless the market goes up, since there is so much contention in the tape when the market goes down, so much desire to drive the market up or buy the dip, and it'll be interesting to know if that will ever end, at what will it take for that to end, another 20 or 30 or 40 or 50% down, or will the market actually pause here and go into bull market mode? So those are the trades on the day. Wednesday, FOMC day, September 21st, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.